So let me just explain strategy I'm using. My strategy is in two model. I explained that the entry model I'm using is only two entry model I'm using. The first one is BOS Fibonacci order block is equal to my entry, while the second entry model that I'm using is liquidity first, break of structure, and order block. So, and I said that the one that has more high win rate is the one that has liquidity. So now let me explain the two entry model, but let me start with the first one. Let me use downtrend first. Assuming market is selling, and what I'll make the market to say is when the market has lower high, lower low, you know.
Yeah.
This is lower high, this is lower low, this is lower high, this is lower low, lower high, lower low. The next thing, market gave us lower high, yeah. But what happened? It failed to give us lower low, you know. But mostly, if technical analysis, like you are using trend line, all those things, you call this thing double bottom, you know. You call it double bottom.
Yeah.
And this is what everybody know. But the thing is that this double bottom is not going to confirm our entry. You understand? Our own is just that there must be what? Break of structure first. That is BOS.
Yeah.
So now, if this market has break this lower high, this particular one here. So the next thing, let me study. The next thing is Fibonacci. Okay, now you can use two things. You can use either Fibonacci or gain. Do you know what is gain? GAN or something like that. G, this particular listing. Let me show you here.
Yeah, I think I saw it in
this particular and this thing. Do you know how to use it?
Yeah.
You can use this one of Fibonacci. The reason why I'm using this thing is because we are not there is this word that they used to say in Forex: buy low and what? Sell high. So this Fibonacci or this GAN is going to like separate the high price, something like that. Instead of to buy high, it's going to make it to know, okay, now this level is in high price, so just stay away from this level. You understand? So example now, let me say I use this GAN now. Let me use it so that I'll use this so that you understand what I'm trying to say. So the market starts from here, and this is where the high stop, you know. So because we are looking for entry, it means that entry level we see here, we are not going to take it because this area represents high prices. So any entry level you see below, any entry level you see in this area, that's when we can take, because this level represents, just call it low price. Now they just call it discount price and then premium price. So this one is called premium, while this one is called discount. So then this one is for the GAN or gain, anyone. Let me use the Fibonacci. Assuming you draw the Fibonacci from here to here. What I use in Fibonacci is two prices. I use 0.5 and this 0.618. So this middle 0.5 and this 0.618. Let me mark it very well. This middle like this. That's where I'll look for my entry. It's not that I'll place entry there. That's where I'll be looking for entry confirmation for the buy. Mostly what people used to do is that if the market just spike up, they'll just be buying directly, you know.
Yeah, I can.
Okay, I say what people used to do mostly is that if they say that the market is buying, what they'll just join the buy and be buying, you know. But they know that normally any impulse move there's always correction. But for you to get where the correction will end, that is the problem. So that's the reason why this thing is going to help you. This Fibonacci, that's 0.51, that's 0.5 and 0.618. That level, that's what you're looking for your confirmation entry. So this is the first step. Why the next step here now is OB, and OB represents what?
Order block.
Okay, now do you know what is order block first? Like what make order block or something like that? How do you know this order block? Do you know it? Let me just explain what is order block. Order block is the last bullish or bearish candle before any breakout. Let me say it again. Order block is the last bullish or bearish candle before any breakout, like break of structure from any. So example now, if this market, if there's high here and there's something like this, you know, this is high. If this market break this high here, before this market break this high, the market have formed order block before breaking this high. So I say that if the market is buying, if the market break it to the upside, the last bearish candle before this breakout is the order block. So what I will do now is that I will give you examples, so that, because without you knowing this what is order block, you will not understand this entry, how you're going to get this entry. So that is the reason why I said that you should go through that video, because that video explains many things there. So let me explain. Okay, now.
Okay.
If you check this place well, let me just use this current price. This is the breakout. This is the low, Abi. This one is low. This particular side. And look what happened next. After the market broke out from this level, what is the other block? Okay, I know, because you don't understand very well. So I said that if the market break out to the upside, the other block will be the last bearish candle, because the market break out to the upside. So the other block will be the last bearish. But if the market break out to the downside, the other block will be the last bullish candle. So where is the last bullish candle in this strong move here that broke this low? The last bullish.
Should be in that upside now.
Where is it? Is it this one? This is the last bullish candle. So this is the bullish candle. Bullish candle means any green candle is bullish now. You understand? It does not mean that it must be buying, like it must be pointing up. Or no. Any green candle is bullish. Any red candle is what? Is bearish now. Red represents bearish, while green represents bullish. So now this is the last. This is the last what? Bullish candle. So the reason why, if you notice my today's setup, I sent this in the morning. You know, maybe if you are following, you know, I sent it in the morning that this.
Yeah.
But what happened? So what I was thinking is that because this is the last bullish candle, and when the market did not tap it, so the market was in this place before I send another buy limit, another buy entry, you know. So what I was expecting is that the market need to come and tap it again before selling, but the thing did not work. You understand? So what I'm trying to say is that you see how accurate it is when the market near that place, and we see how the thing drop. You see?
Yeah.
So I'm just explaining how other block now. So this one is for the sell side. Let me explain for the buy side. Serious, if you pay attention to this to what I'm teaching you now, you'll see that this trading you're seeing is not hard at all. It's only what discipline and psychology that is making it to be hard. If you can follow your rules, follow this strategy, you will pass your account within highest. If you are just starting, you pass it within 1 month. So now this is the previous high. When the market break this high, where is the other block here? How do you know if you are following?
When the market break?
After the market broke this high, where is the other block? After the market broke this high here?
The red candle.
Where is it?
Red candle.
Is it this one?
Like
this one, Abi?
No.
This one?
Yeah. This one, yeah.
Yeah, those people did that. So so now let's follow it now. You see, after you mark the red candle, look what happened next. See the market come back to that level.
Yeah.
And look, when the market tapped that, what happened next? You see what happened? You see how the thing. So let me give you an example now. If you are aggressive trader, you enter your buy from here. Don't lie, you. This one trade will pass your account. You pass with one. You know. Check it. This is 30 minutes. This is 30 minutes. Look how far it has. This one trade will pass your account. Just I'm telling the truth too, because me too. I know that there's something that I used to trade aggressively. It's not every time. It does sometimes. So I know that from year to year, I can use and pass with one of my accounts. But just that don't do that enough. If you are trading, follow your risk management. Actually, you watch that video now. The video talk about risk management. And you see that those people that are surviving in trading, they're not risking more than 1 or 2% in each trade. But if you are funded, if you're already funded, highest 1%, but 0.5% is going to be okay because of your psychology. Because if you have good psychology, it's very hard for you to build accounts. But if your psychology is no good, and for you to mess up with your psychology is when you are over risking, you know. So
yeah.
Let me go back to that I know that you understand this other block I'm talking about.
The other block.
Because that's the main purpose of this explanation here. If you don't understand, it's very hard. So now it means that if you have gotten our what breakout structure, I've gotten our breakout structure. So in your own mind now, where do you think that our other block will be? I want just look what you will say.
Our breakout structure will be the next, the last red candle after the.
Okay, like the case I'm asking, will your entry be outside here?
Yeah.
Will the entry be outside or inside?
Outside like how?
Like, will you be looking for entry out after this break off or inside?
No, it's inside. You look for entry inside now.
Do you know why I'm asking all this question? Because if you choose outside, it means that you are not flowing. But if you choose inside, it means that I see that the last bullish candle and the last bearish candle before the breakout. So it means that no matter where the market, no matter the candle, the candle must be inside before the breakout. And if you check well, when I use the Fibonacci, I told you that the Fibonacci is under 0.5 and 0.618. You see, it's still inside. So these two confluence I really make you to know that okay, now this trade, this entry is likely to go your direction more. After you have marked your OB, the next target is to what? For you to avoid. Do you know what is FOMO? FOMO. You do not do that.
Fear of missing out.
For you to avoid fear of missing out, prefer setting what pending orders because of that FOMO. For you to miss out, like for you
prefer what?
Setting pending orders.
Okay.
Just to set your buy limit and put your stop loss. Me, I used to use just put normal stop loss. Any stop loss that you can afford to risk, but don't forget, don't be risking more than 1% again. How I can advise you. Because this strategy now, it can give you example now. Let me use this today's trade. I was targeting 1 to 3. That is, I'm risking 10 pips to make because my entry was in this place, and I was risking 10 pips here to make 30 pips. That is this low here. That's what I was targeting. Here. Let me use my something like this. You see that you are risking 1 to make 3. You know, and how many percent do you need to pass this one? 8%, I mean.
Yeah.
So there's something called this one is just like direct fixed and if you want to just set your TP, but you can be like scaling. It means that you are adjusting your stop loss and it means say as long as you hold this trade to this level, that is almost okay. You see this only one trade, you almost hit 8%. That is 7.5%. You see what I'm just trying to say is that don't risk more than 1%, because even if you risk 1% in your challenge account, you can pass the profit in 3 to 2, let me say 2 to 3 trade. If the 2 to 3 trade hits TP without hitting stop loss, you understand what I'm trying to say? So what's the essence of risking 5% at once? You know, when you can risk 1% and still pass the account. So that is the big mistake traders used to do. One of the big mistakes traders used to do. If you have gotten your OB, then set your pending orders. The next thing, just don't even look for entry at all. Like what I'm trying to say, that don't be taking maybe the market will turn here or turn here. Just after you have point out your entry, put your pending orders, let it hit your pending order, and target your set your TP to then. That is the end. So this is how this first entry model work. Now, do you understand this? Do you understand it?
Yeah, I understand this.
So let me do it for the uptrend, because I would like to do it in the opposite side so that you understand very well. So for the uptrend now is that if as long as the market is buying higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, but what happened? It gives us equal high. But normally, if you are using trend line, you call this thing double top, and you want to say yes, but this thing can just like break and continue buying, you know. So the only thing that will confirm this market that is going to sell, first thing is to what? Break this previous low. That is the first thing.
Yeah.
So the next thing what you do is look for your Fibonacci. Mark that place to this level here. Then mark out that 0.5 level towards 61.8. This middle level here. That's where most like that area, that your other block. This one is the last what?
The last.
This one will be the last.
The red candle.
Yeah. No.
The last red candle.
No, it will be the last bullish.
Green. Okay, last green candle. Yeah.
Okay. Yes. So the first thing now. So you can just be demarcating it, like put your sign, just write BOS, your status nice to set, just to make the chart to just design the chart. How do you say? It's just a design chart now. It's not that there's any special thing there. Or you just like know what, okay, the reason why I mark that line, something like that, the reason why I'm looking for entry. So this place I can just put, okay, now assuming there is one last bullish candle, I can just put what I should do is that I'll just put my, assume this 30 minutes, I'll just put my 30 minutes OB. Why? Because I'll say, okay, this is where I'm looking for entry. The next thing, I'll set my pending orders. I'll do MC, okay, I'll set my pending orders here. So I'll still explain anything for you. This one is just like the strategy entry, like how I should take my trade. So there's many trade management, because this is not only the thing you will learn. So this let me say I'm risking 10 pips, I'll be targeting 20 to 30, anyone. Just that it must be minimum 1 to 2. Minimum. Can target 30 and 3%, 4%, something like that. So the next thing is just to wait for the trade to come back to that level, hit your entry, then come and hit your this thing. So normally, if the market is, let me explain something. If the market is buying, it will be, let me say it will surely, let me say it will be buying, you know. So if you check this thing I drew here, this thing shows that it's buying. So if you check, you see that this thing is what? BOS, you know.
Yeah, BOS.
And why this thing is all B that you come here to, and this thing is under what? BOS, and this is under O. So it's the same thing that the market is doing. The only thing is just that I don't know why the market is buying, but we will be looking for sell. You know. But if you follow this simple logic, you see that just allow this thing to master you, so that your win rate will change. The way you trade, very very well. So hope you understand this first entry model.
Yeah.
Thank God that you have understand though. So the only thing that you go and practice it, and also go and watch that video, because it's that guy that taught me this video too. Don't think that is he's the guy that taught me. But what I did is that I created my own personal system. Like I use his own strategy to create my own system. So it's not that it's trading the same way like this, but it's trading like this. But I just create my own system that fits me.